All right, what's going on, guys? So in the first strategy right here, right, I'm gonna be talking about strategy number 1. This is gonna be for scalpers. Okay, this is gonna be for scalpers. So I'm gonna show you the settings for probably the best settings for scalping. Okay, you guys know that scalping would go. Hey, I would say for me, from the 15-minute low to the 1 minute. Okay. If you go higher, I would say most likely you're gonna have to hold a position for more than a day. You know, so for me personally, the scalping really probably is from the 15-minute and lower. Okay, it's an entry that ideally you want to close within a couple hours, right? Probably within a couple minutes, depending, right? If you spot an entry on the 1 minute, you can get out in 10 minutes, 5 minutes, depending what's happening, right? Another thing very important that I'm sure I'm going to get a lot of questions here, and and this is something obvious, is what you're going to be trading. If you're going to be trading currency pairs, if you're going to be trading indices or futures, which is the same, Nasdaq, S&P, you're going to be trading gold, you're going to be trading Bitcoin, cryptocurrencies. You're going to, like, if you like trading cryptocurrencies, so you want to use this strategy with cryptocurrencies, you're going to have, I'm sure that you probably have an idea to when they move the best, when they move quicker, right? Because one thing is, I don't want you guys to be looking for an entry every time during the day, like any time during the day. No, look for a specific time. For example, if you're on a GBP USD pair, you know that the pair most likely will move really nice during London session in New York, right? Why? Because it has a GBP and it has USD. So this pair can move really nice during London session and New York session. Okay, so do your own due diligence depending on the country that you are located. Search for the hours and see what time is it in your country, right? What time does London open and closes? And you can pick. Look, you don't need to be also in front of the chart for the entire session. 8 hours in front of the chart. No, you don't need that. You just need probably four hours, depending. 3, sometimes less. When in the future, once you become profitable, you'll notice that spending less time on the charts is actually better. Spending more time, it's more stressing, and it means you're not finding anything. Sometimes you keep looking for entries, over and over, right? And you over trade and you kill your account really quickly. No, you just want to try to go easy. Try to normally go for either the opening time, like for example, New York session opens at 8 a.m. in the morning for me in my country, right? London session is around 3 in the morning. So normally the first 2 hours or the first hour, if you're scalping, is very volatile. There's a lot of volume in it, So the first hour of New York, from 8 a.m., the first hour or 2, you probably can get some really good volatility there, right? So you can either, the market can either hit your TP or your stop loss really quick, So because we're scalping, you want to get in and out within the same day, within a couple of hours. So anyways, I'm going to pretend I'm using right now GBP. This is GBP USD right here, right? Where I'm going to be using, because I'm going to be scalping, I'm going to try to go lower time frame here. From 5 minute, 1 minute, depending on the time frame you like. And we're going to need to use the 20, 50, and the 200, okay? It's necessary this time because we're scalping. It's difficult to know, hey, where is the trend going? Are we ranging, right? Is the trend going up? At least, I recommend you at least having the 200 on. You can remove the 50 if you want. You can just leave the 20 and the 200. But the 200 is very important. Very important, because notice that right here, You see where the 200 is. You can see that we're trending up, right? We're definitely trending up. So what are you going to do? You're going to try to avoid taking sells. You don't want to take sells. You want to avoid taking the sells, right? You're not going to be selling here. You're not going to be selling here. You're not going to be selling here. You're not going to be selling, right? You want to try to avoid sells. As long as you are above the 200, what you're going to do is only going to look for buys, okay? If you go lower time frame, notice right here, we were bearish, but notice how market is just, I mean, it's easy to see. I don't know how I can explain this, but if you don't see this, I don't know, probably you're blind. I'm sorry, but, you know, when markets are moving sideways, it's simple to see. It's simple to see. Even though we are, yeah, it did move sideways right here, but we're still bearish. It's a bit more bearish, but we did move sideways right here. So this is a sideways market, right? So I'm going to, just for this example right here, I'm going to open up the time zone indicator, and I'm going to go 8 a.m. in the morning to probably 11:30. I like that, those hours right there. So I'm going to open the indicator, and my job is, whenever my session opens, which is this gray zone right here, I'm only going to be looking for entries within this session, okay? What's the first thing I see when the session opens? I'm bearish, right? Market is below the 200, right here, right? We're below the 200. As a matter of fact, let's go ahead. Let me open also the 50. I'm going to throw the 50 in there as well. Right? So everything right here. Notice that when the session started, we were going bearish, but then the price started pushing, going up, going up. You know you're not going to be buying. You're going to be buying unless we break entirely above here and then we get a signal here to buy. But as long as we're still below, we're going to be looking for, in this case, for sales. But depending on the scenario, in this particular scenario, I don't like when the market starts tapping the zone, tapping the 200 too many times. That's telling me we are sideways. We're moving sideways. I don't like that. All right? If the market, you notice that within your session, price is tapping the 200, probably look into another pair. Pay attention. Set some alerts here. If you want, set an alert here, set an alert here. But go ahead and look for another pair, right? Because it's most likely going to take a long time for the price to either go up or down. It's most likely going to be choppy. And that's what it did here. Too many times. Would I be selling right here? No, I would not be selling right here. I will not be taking this sell. I will not be taking this buy or sell, for example, right here. Probably not. I don't like when the price touches the 200. I don't like getting these entries right there. What do I like? I rather let the price go, right? Okay, from here it did drop, but unfortunately we enter into another ugly range. Guess what? It was not a good day to trade GBP USD on the 1 minute. It was not a good day, right? But this is strategy. It was not a good day to trade it, right? We just accumulated too much, and from here it did drop quickly. But oh, why didn't you take this one? And no, because I don't know. We were still in the range. What I would do is I would wait for the first sell to come out, and if it really wants to continue dropping really nice, you're going to see it on the trend. The price will probably pull back, give a buy, and then eventually it will, if it really wants to go selling, it's going to print a sell somewhere here again. And that's the trade you can take, the continuation. But when the price is tapping the 200, no. I don't want you guys to pay attention to that. Look at this day. Also ugly. Look at this ugly accumulation right here. Right? And then all of a sudden crashed probably here. I don't know what time was this. I don't know, maybe we had some sort of news, but this was a big crash. Oh, why didn't you take it? No, because no. It's not a good thing to take right there. Price tried to recover a little bit, but then it moved sideways again and then climbed on top here, and then the hour was over. So, ugly day to be trading. At least during New York session, ugly. Right? you have several pairs, guys. You have several pairs to look at. Look at this. I don't like it all, especially on the 1 minute. You know, you might actually want to take a look at different time frames, right? The 1 minute is gonna get nasty sometimes. Notice the 200 moving average. How many times the price is just going up and down, up and down, up and down, right? But it's just it is pushing up somehow, but it's more bearish. And I mean it is more sideways than it is bullish. So ugly right there on the 1 minute. You have to analyze, okay, to see what time frame for you is the best. Probably the 1 minute is too nasty, too much choppiness. Notice this nice drop. What time did the prices started crashing right here? What time was this? 3 in the morning. London session, opening right here. It started melting. Let's see how did that look on the 1 minute when that crash started. Look at that trend. That beautiful trend on the 1 minute. It's a lot clearer. You see, you don't have that many signals, right? As you were having, oh, look at all this crap right here, right? Avoid this type of thing. You don't want to trade near the 200, right? You want to make sure that you are far away from the 200 moving average. Look at the trend, right? Where are the best shots to take? Not this one. I don't want you guys to be catching, oh, I missed the first move. No, because right here we were ranging. Ugly ranging, right? Let the trend go. Let it develop, right? Let it create the move. All right, all of a sudden, you get a buy, you get prepared for the sell signal, boom, print the sell. This is the sell you're going to take, right? All of a sudden, pulls back, gives a buy here. Don't worry. Wait for it. If you're on break even, probably right there, maybe got you on break even, but then it prints a sell. Boom, that's the trade you want to take. Oh, nice sell. Price pulls back again, and then boom, it prints another sell. Boom, you can take another sell continuation. Price range again, but notice the range, right? We're still far away. Look at the 200. I mean, you can see, you can differentiate when the trend, when the 200 is far away, right? It's telling you that we are hell bearish. We're still bearish, right? So if you continue getting sells, you can continue getting shots. So you see, you don't take the buy, you just wait for your sell signal, boom, and then price continue. You see, so this time the New York session, by the time New York session opened, we were trending down beautifully. So this day, beautiful to trade, right? Because the trend is on already, right? When the session is opening, you are already on a trend. You know what I mean? Range, ugly right here. You don't want to trade. Look at this. This is beautiful. And this is what I mean. Again, I'm on the 1 minute, right? Would I be taking the sell here? No, at the beginning, no. Market was shitty right here. As soon as the New York session opened, we were kind of still moving a little sideways. And we just broke below the 200. So it looks like we're switching to bearish. Look at this drop. Oh, man, I missed that drop. That's fine. Let it go. Let it develop. Let the price do its thing. It pulled back. They give you a sell. Beautiful sell. You're going to take in that sell, right? Stops above the swing high. It did pull back. I don't know, probably got you on break even. If you got scared right there, probably got you on break even. It's fine. If you got you on break even, you secure some profits after the price taking this low. You took some partials, put it on break even. Price got you back on break even. Guess what? A little later, not too long ago, boom, gave you another beautiful sell. Nice ride to the downside until the session was over. Right here, started accumulating again. Hope it makes sense, but you have to make it as simple as possible. Don't overthink too much. Don't complicate stuff. This should be this simple. If you want to use the trailing stop option, it's up to you, right? As well. If you want to use that option, is there, right? Whenever you enter, you keep placing the stops, right? Right here, this one got you out on break even. But then you sell, right? You sell again. And as the price is going down your direction, you keep trailing your stop all the way down until you get stopped out right there. So that's basically it, guys. It's simple as that. Let me know what you think, and I'll see you in the next video.